Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast. I'm your co-host, Pearson York, filling in for Brett Swarts. Each episode, I'm joined by some of the best wealth, business, and real estate and leadership individuals in the world to share ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. As always, we are streaming on the Expert CRE Secrets podcast, as well as the Capital Gains Tax Solutions YouTube channel, Living in Newport Beach YouTube channel. And I'm super pumped about this next guest. He's going to add a ton of value. He has an extensive background in accounting and going through the different tech firms, Google and Uber. And he's landed himself in the Redfin of Australian real estate tech companies. Basically the Redfin of Australia. So please welcome John Foong. How you doing, man?
Thank you, Pierre. Pleasure to be here.
Yeah, absolutely, man. So tell us how'd you land yourself in this gig?
So I guess there's two realms, right? One is I've always loved real estate, and so I was very it's been great to learn about what you guys are doing, because real estate's been a huge part of my life. My dad was a real estate agent at the end of his career. He'd invested. He was originally from Malaysia, then migrated to Australia in the 70s. Real estate and investing in real estate was part of my life. Ever since I was 18, first paycheck, put a down payment apartment. Do that, capital gains, go again, learn how to leverage. So that's been a huge part of my life the last 20, 30 years. But on the flip side, I've loved tech and I've loved sales. As you mentioned before, I started my life as an accountant. That was my major. Worked in consulting, did my MBA, end up at Google, spent 13 years there, did a variety of things, marketing, operations, but end up in sales and loved being at Google and loved the tech and loved the whole customer-facing aspect. And, my last role was leading basically the agency team at Google Cloud, serving 20,000 cloud agents, across the world. And then I had a similar role at Uber, running our Uber for business account management and our customer engineering team. And so I've always loved tech. I've always loved sales. I love real estate. And so about 2 years ago, when me and my wife, we have a few young girls, and she's American, I'm Australian. We've been based in Silicon Valley for a while. We're looking to come back to Australia to be closer to my family. And when we reviewed companies in Australia that would be suitable, Domain, the company I'm at, was the intersection of all those things. It was a technology company because it's a real estate portal that helps 8 million Australians every month find their dream home. It's been a well-known brand that everyone in Sydney and Melbourne knows, and I grew up with. It's sales. It's tech, it's real estate. It kind of brought those things together, and they were looking for a new chief revenue officer, someone to look after all their customers. So it was a match made in heaven, actually, and I've loved it.
Yeah, it sounds like it. Right on. Awesome. So, okay, you mentioned a couple different things, and you've lived in the United States and you lived in Australia.
And a few other places, but I lived in Africa and Ireland and in the UK for a while over the past few decades. But yeah, mainly Australia and America for the longest time.
Okay, so let me ask you this: can you quickly summarize the differences between the Australian real estate market and the U.S. real estate market for people?
So thank you for that question. The American real estate market is about 20 times as big as Australia in terms of just number of houses, number of sales, total volume, about 15 to 20 times. And that reflects the size of population. But the amount that Australians spend on property is much larger, right? In terms of the average sale price of a home, in terms of the amount of revenue in the real estate industry, commissions paid and things like that. And the way that's reflected is in America, real estate's a big deal, but the real estate agencies like around my area, obviously I lived in Silicon Valley the last 5 or 10 years, they're kind of like tucked in an office building somewhere, in the town. In Australia, you go near the railway stations, which is the center of commerce in each Australian city, Australian suburb. The prime real estate is taken by real estate agents. And not just one or two. There's like 5 or 10 really big brands. And then each suburb will have its own boutique brands. So you're walking down the main street, of each city, of each suburb. And it is dominated by real estate agencies. And that's because in Australia, we were saying real estate is Australia's national pastime. When you go to a barbecue, when you go to a dinner party, we're always talking about house prices going up, going down, interest rates going up, going down. And interestingly enough, Australia has some very advantageous capital gains laws, which make it such a very, very attractive investment vehicle, which was certainly my path, once I turned 18. So it's a big deal in Australia. I like to think of it as it's smaller than America, but it's a bigger deal here.
Sure. And you mentioned something interesting. You mentioned that the capital gains is really favorable over there in Australia. So dive into that a little bit, and how is it different than the United States capital gains?
Sure. So I'll give you some personal examples, right? Primary residence. In America, there is a small capital gains exemption for primary residence, and depending on where you are, right? It's 250K if you've lived there 2 out of the last 5 years, 500K for a couple, right? And that's a big deal. You should take advantage of that. Though in Silicon Valley, that doesn't go that far. In America, as long as you're an Australian resident, your primary residence is tax-free.
Wow.
That's free. So it's a big deal, right? You have a massive incentive to invest big and continue to invest in your primary residence. And so that's one thing. The other thing is the way that capital gains, the way that expenses are monetized or are counted here. So let's take some specific examples like depreciation, and interest are very, very favorable. And in America, for example, like you can take a depreciation charge, but you pay it back in a sense when you sell the property.
Mm-hmm.
Obviously, it increases or it decreases the original selling price. In Australia, these are expenses you write off every year. Interest expense write off every year. So that's not for a primary residence. That's for an investment residence. But that's something that's very, very attractive in Australia, which means I think, if you have a steady income and you have borrowing capacity in Australia, there is nothing more attractive than property investing if you can hold for at least 5 years. You're going to make a good 7 to 8% on capital gains on average each year, particularly by a single family dwelling, rather than an apartment. And then if you hold that over time, most people are putting down 20% here. You're going to leverage that 4 or 5 times, and you're getting capital gains on that. And because the interest, the way that you can write off the expense against tax, it's very, very tax efficient.
Yeah, it sounds like it's awesome over there. Australia, the way that I understand, I've never been there, but the way that I understand it, it's pretty much like on the outskirts of Australia is where most of the stuff happens, and then like the middle is where all the kangaroos live. And there's like not a lot there, but like vacant land. Is that
that's a good way to think about it. So obviously, most of your listeners are American. Australia is a slightly smaller landmass than America. It's actually kind of similar in dimension in terms of height and width. Its population is much smaller. So instead of 300 million plus, it's about 25 million people. And you're right, 90% of those people live on the coast within 1 hour of water. 90%. And in fact, 60% of people live in either, 60% live within reach of Sydney or Melbourne, 2 large cities. They account for 10 to 15 million people. And the only augmentation I'd say to your statement is people live mainly in 2 big cities or in one of the 6 capital cities. Or six state capital cities. That's the vast majority of people. The rest of the people are pretty close to there. And in the middle isn't even the kangaroos. It's mostly just sand. The kangaroos are still usually close to the coast.
So dive into that a little bit. Is it being developed like from the outskirts in, or like why is it so vacant in there?
The interesting thing about population is like, even if you take America, I don't know what the percentages are, but even if you were to develop a lot of America, you wouldn't have to go to a lot of, rural places. Most developments have on the outskirts of cities, and there's still massive capacity, to do so. So in Australia, I think it's pretty similar to America. We have not in my backyard. It's hard to develop things. It's particularly in a high inflation environment. Most of the development that's happening is just on the outskirts of cities. You have seen something, recently where people have started to move. It's called not a sea change where people move to the beach. It's called a tree change. People are moving to more rural environments, which are, a bit more in town. They're not in the desert, but they might be 4 or 5 hours away from the coast. And you've seen a lot more of that. Even that's been a slight curtailing over last year. Most development happening is around the outskirts of the cities, which are on the coast and primarily around Sydney, Melbourne, Brisbane, etc.
Yeah, that's interesting. And what is the market doing right now with like the interest rate environments and inflation and all that kind of stuff? How is that taking effect over there in Australia? What's going on?
I would say it's pretty similar to America. We've raised interest rates a lot and very quickly. We were coming from a low unemployment, low interest rate. Our interest rates were 0.1%, for our Federal Reserve. It's gone up to near 4%, in a pretty similar period of time. The one big difference in Australia is that raising interest rates in Australia has a more direct and immediate impact on the real estate environment. And the reason primarily is because most mortgages in America are 30-year mortgages, 30-year fixed mortgages. That's what I tend to use. Even if you don't have a 30-year, you likely have a fixed for 7 years. Now, in Australia, about half the mortgages are fixed, but they're for about 2 years. They're fixed for 2 years, and then they go back to variable. And particularly now in a rising interest rate environment, most people just get immediately variable, right? And so what that means is if the Reserve Bank raises interest rates, it has a near immediate impact, not just on people, the small percentage of people who are looking for a house, about to take out a mortgage, but for at least half within 6 months, and within 2 years, all of the house owning or the property owning population, which is more than half of the adults in Australia. So what that has meant is by raising rates a little, they probably have a bigger effect relative to what happened to the US.
So you guys are not facing the supply issues that we're facing here, because the motivation to hold on to your property with that good, sub 3%, 30-year fixed rate debt is not happening in Australia. You guys are basically like, all right, I'm locked into this thing for 2 years. Hopefully I can ride it out if I got good debt. If I don't, I've got floating rate, and that floating rate is adjusted, and it's impacted directly by the rise of the interest rates. And so now I don't really have as much of an incentive to hold on to the property, so I can sell.
So I would say that's directly true compared to America. And to add to that, if it's for primary residence, there's no capital gains tax, right? So,
Right.
by selling it, you're going to have like this $1 million liability, which will not be the case in the States. But all that said, we do have a massive supply problem. We actually have a massive supply problem. We have, like, I live in a fairly expansive area, in the North Shore of Sydney. This place is full of 4 and 5 bedroom houses, and a lot of it have like 2 people living inside. They're emptiness, right? So there still is an incentive. There still is a friction in selling, and there's a few reasons for it. Most of our tax here, particularly for more expensive properties, is not like America, where it's a land tax or a property tax, which is 1.25% per year every year.
Mm-hmm.
It's something which is paid by the owner. It's something here called stamp duty. This is in most of Australian states. It's not the state level, and it basically means that when you purchase a property, you are paying a 6% tax hit on top of the other expenses. Right, it's a one-off payment, regardless of how long you hold the property.
It's a sales tax.
Yeah, we call it stamp duty, but it's effectively a buyer's tax, is the way I think about it.
Mm.
And so if you're selling, that's okay. But if you're selling and you're going to buy again, not only are you going to pay commissions on the sales side, similar but less than America, if you buy again, you're going to have to pay 6%, which is quite prohibitive.
Mm-hmm.
And that tends to actually hold a lot of people back. The other issue we have is a supply issue. I would say Australia is similar to a lot of parts of America, where it's very, very hard to build, and there's many more people that want to live there that can afford to get a house, right? Because we have a lot of migration here, a lot of people from all over the world, particularly Asia, constantly coming in. So what that means is you have the supply imbalance. More people are moving and getting born than there are houses getting built, similar to many parts of America. And so as a result, right now, house prices continually go up higher than inflation and wages over time. And then secondly, rentals are now going through the roof because there's not much development. There's plenty of people coming in. And so if you're someone who's living in a house, you probably don't want to sell, because you're going to sell unless you're going to move out of the area and go somewhere totally different, which is a small percentage. Then what are you going to do? You're stuck. So we have this situation where the number of rooms in people's houses that are unoccupied is an all-time high in Australia.
So you guys have a little bit of a different issue. Your issue is a little bit more on the actual acquisition of real estate. You have that buyer's tax that's really kind of affecting you, and then you have the same problem that you run into, right? If people aren't selling, there's not a lot of options. You've got an influx in people coming in that are migrating to the country.
Yep.
Not as many people leaving.
That's
Your
right.
actual development is hindered by just red tape and that kind of
Legislation,
thing, and
attitudes.
legislation. And so you guys can't actually build fast enough for the demand that's coming in.
Yeah, so it is quite an analogous situation, I would say, and so for that reason, we have a similar crisis, and that is actually has made the fall in house prices not as pronounced as it could have been. It's gone down about 10%, similar to parts of America, and the reason probably hasn't gone down further is because just people don't want to sell because they don't know where they'll go, and so the amount of supply in the market is at an all-time low right now.
Wow, that's really interesting to see that that's actually happening all the way on the other side of the world.
Yeah, I would say it's pretty common in a lot of very desirable places, which I would consider, a lot of America and a lot of Australia as well. I think you see this dynamic. You see it in New Zealand, to a lesser extent in Europe, but yeah, and I think it's more pronounced in a downturn, and just people don't want to sell. In an upturn, you have the opposite problem, right? You have price, you have supply, but prices are going through the roof, and that tends to be the story of property and why it's such a great capital gains investment.
Do you guys have any sort of like 1031 exchange or cool tax kind of like deferral programs, or is it just like you don't even have capital gains on the sale of your assets?
Yeah. So because there's no capital gains, the 1031 is less useful, or there's not necessarily a need for that here. And then for investments, there are some vehicles you could use, like using a trust or something like that, to defer or share capital gains. We also don't have a estate tax here, actually, so an inheritance tax per se. So there's a lot of dynamics that make that mean we don't have a 1031 in Australia.
That's pretty interesting, you guys, because that's such a big thing here, because I mean, like, especially if you live in California, New York, New Jersey. I mean, you're paying 37 to 50% because you're absolutely right about the depreciation coming back to you, right?
Yes.
And when you do a 1031 here, everything carries over, right? So you got to replace debt. You got to go find a property in like 45 days. You got,
Yeah.
you have all these like restrictions, right? Your depreciation schedule travels. Like it's not a one-time write-off. So, but what we don't have is we don't have that buyer's premium that you guys have, that 6% buyer's premium.
And it's interesting. I see both the 1031 exchange. I see that as a symptom of a lack of supply. Because we lack supply in desirable areas, capital gains outpaces wage growth over time and inflation over time. And in Australia, because even though we have similar different capital gains regimes, because you have that bias tax, you have actually a similar dynamic here. Not the 1031, but we call in Australia the bank of mum and dad, which is this, right? About 40% of first-time home buyers will rely on their mum and dad to finance part of their deposit.
Yeah.
And that a generation ago, it was close to zero. And I think in a generation's time, we're close to 100%. Right? That's the reality of chronic undersupply. So we don't have a 1031. We have like an informal bank of mum and dad. And that's the way it works here. And I think until we are able to increase supply, you're just going to see those things increase.
The real estate values in Australia, what are they ranging? Like what's the median home price in the area?
Yeah, I mean, it varies by state, obviously.
Of course.
In where I'm at, so the most desirable places, so Sydney and Melbourne, in this case, the median house price is over $1 million. So that's $1 million Australian dollars. So if I convert that to about that's about $700,000 US dollars.
Okay.
And then, the rest of the country, it's almost as much. We tend to look at just the capital cities as distinct from rural, but the capital cities, it's about $600,000 US dollars. So it's expensive here.
Yeah. Are there? I mean, and there are pockets where you have your mega mansions, right? Your multi-million dollars on the coast and all that kind of stuff as well.
I would say it's less pronounced in the US. So, in the US, there's quite a lot of properties that are $20 million or more.
Mm-hmm.
In Australia, there's probably a few hundred, not tens of thousands. But yeah, in the very nice place of town, the average price might be $3 or $4 million US dollars. But these are suburbs; these are not entire cities.
Yeah.
So it's still per capita less than America on the extremes.
The average size of your homes, are they standard 3-2, 1,500 square feet?
Yeah, it really varies. I think it's similar to America. It really really varies by county.
Yeah.
Quite one interesting Australian quirk is what is reported in Australia, which honestly makes not much sense to me. I like how we did America instead, is the total land size. That's what people tend to focus on. The quarter acre block, right? That's what it is. Whereas in America, we looked at obviously dollar per square foot of built space, not of land.
Yeah.
But in terms of actual dwelling size, you have similar dynamics. A big house here, is about 4,000 to 5,000 square foot. A typical house is probably a third to a half of that. An apartment's pretty similar.
Sure. That's super interesting. Okay. So interest rates affecting you guys, buyer's premium is really what's holding it back, because if they sell, where are they going to go? They're going to have to pay commissions and buyers. That's going to add up. In Australia, right? I was reading this issue that's going on with the with NAR right now. How there's this class action suit against NAR for just basically these sellers saying that buyers agents are increasing their home prices and they're trying to cut the commissions from the buyers agents. And the in Australia, from what I understand, it's already pretty much the listing agent is the only one who has the commission on that. Is that correct?
Yeah. This is another thing where I think America is actually a bit more sophisticated than Australia, even though there's a lot more money per capita spent on Australian real estate. In Australia, you don't have a buyer's agent and a selling agent by default. Typically, you just have a selling agent, and that person's paid a commission between 1% and 3%. That commission is quite negotiable. I think it's less standard than what I've seen in the US. So there's no buyer's agent by default. Now, there are buyer's agents, but they're not. It's a bit of a wild, wild west. And I would say most people don't use that. It's single-digit use percentage, and that tends to be skewed for more expensive properties. And so the effect of that is there's less buyer's advocacy by default. And so, we similar to America, we have like in a sense a listing price, and that it may be different to a sale price. Maybe it's very high, maybe it's very low. There are different tactics you can play. But because there is less advocacy for buyers, a lot of government legislation is your listing price should be within 10% of the sale price. That's the law in most states. It's different state by state. And the practice you're talking about with our equivalent of NAR, we have the Real Estate Institute of Australia, is our NAR equivalent, is there is an incentive for real estate agencies to maybe cheat that, because there are fines for that, but those fines are not very large. And if you underquote, which tends to be the practice, you can probably attract more interest and then kind of jack up the price through an auction system. So that's what our equivalent of NAR is cracking down upon, or being cracked down upon right now.
That's interesting. So your auction platforms are kind of under the gun because they don't have any buyers but it sounds like everyone's like relatively sophisticated I don't want to say a stereotype, but stereotypically, like, I have some Aussie friends, right? And they're super good at a couple different things. Number one, they always know like the statistics of like the population, like around like what's going on. Like they just happen to know that one. I don't know what that is, but they know that. And then they travel really well, and they're always super fun to hang out with. Like stereotypical, right? Like these are my things. But I did not know that they were super into real estate.
Yeah, I think Aussies are super cool. Having traveled the world, I can attest to that. But at the same time, like they're pretty sophisticated, more average buyer. I mean, I said on Domain, like we have a third of the adult population visit us once a month, which is 8 million people. Now, only 500,000, maybe 5 or 6% are actually looking for a house. That means 95% are just looking for fun.
Yeah,
just looking at their sale price, reading articles, all that kind of fun stuff. So they are, I would say, on average, more sophisticated, than your average buyer around the world. But there's so much value a buyer's agent adds. Right? Even if you know the area, just understanding the house and things like that. So I think it is a gap. I hope that we see buyer's agencies increase in value over time. And until then, you will have underquoting. And the way that houses are sold in Australia, which is also quite interesting, is not a Dutch auction or a silent auction like in the US. It's actually usually often a live auction.
Yeah, they're out there, right?
Yeah,
like
that's
pounding the gavel.
Pounding the gavel, things like that. It's very exciting. It's very nerve-wracking. And obviously, there are a lot of advantages to that. I think it benefits the seller because it creates a bit more of a pressure environment. Yeah. And that's why underquoting can be painful for buyers.
So that 6%, every buyer knows that's going on. So if you're like, all right, I got a house that's, $100,000, right? I know I'm throwing on an extra 6,000 just right off the top for the buyer premium.
Usually 6%, much more than 6,000. That could be for the average $1 million house or $600,000 house in Australia. That's $36,000 US off right. That. Yeah, and remember that is not the cause of the recession or the cause of people moving. That's true in good times and bad times.
Right.
It just adds to the cost of getting into the market. It adds to the cost of any transaction, whether you get into the market or not. So it's painful if you're a first home buyer. It's painful if you're selling a house and buying another one. You're going to lose 6% off the bat.
So where do you see this going? Well, you guys have a lot of data, it sounds like, on the back end. So what are your analytics saying? Where are you guys heading for a recession, or what's going on?
So I think let's talk about short and long term. In the short term, a lot of our fate is tied to the US, primarily because what the US does with interest rates will put pressure on the entire world. Mm-hmm. If the US keeps raising interest rates, it's very hard for us to decrease it without really stabilizing, multinational trade. So, but I think for better or for worse, our economies are quite similar in the sense that inflation is proving to be harder to move down than what we thought. Mm-hmm. And secondly, the markets or the economy, the unemployment rate is staying a lot lower than we thought. Right. So you have this situation where people are going to keep raising rates until inflation comes down, and no one knows. I think I read an article every week that says the same thing. Oh my goodness, we're going too hard. We're going to cause a recession. Oh my goodness, we're not going hard enough. Inflation is going to become endemic. And oh my goodness, we got it just right. We're going to have a beautiful Goldilocks, safe soft landing where unemployment's not going to go up too much and inflation's going to come down to 2 or 3%. So in the end, no one knows. And I think Australia is in a very similar situation, to the US. And so I think that's the short term. We might be out of this in a few months. Well, we could still be, in the toilet in a few years.
Right.
I think in the long term is a similar dynamic. There's undersupply, and that's going to make real estate a great investment. And eventually the upswing will come. In Australia, similar to the US, the upswings are much bigger than the downswings. A typical downswing in Australia is 9 months, and you go down by 3%. We've now had the downturn for about 9 months. It's gone down by about 9% in Australia. So it's worse than average. Who knows how much worse we'll get? But the upswings, go for 3 years, almost 3 years, and they go up 30% in value. So the upswings are just much larger. We came off one of those, similar to America, in COVID. And so it's going to be the same thing. Maybe the down market has already happened. Maybe we'll go for another year or two, but the upswing that comes after will be bigger and longer, and house prices will be high again.
Yeah, no, definitely. And it's interesting to hear the take, the data that you guys are gathering, are you guys seeing any sort of interesting trends that are kind of picking up?
Yeah, yeah. I
And
think,
speak to those a little
yeah,
bit.
yeah. I think that the interesting trend right now is buyers are very interested, but sellers are at an all-time low. Right. So
Mm,
we obviously see what listings come on board. That's one thing that we get to see at our website. We also see buyer activity. How many people are logging on? How long they're going for? What are they clicking at? We also, have technology that tracks how many people check into an open house, into an auction.
mm,
Right. So we look at these things and we share them with our customers who are real estate agents, and they get to share it with their vendors, their house sellers. And right now, you're seeing, large activity in terms of people looking on. A lot of people trying to get back in the market, particularly as prices go down by 10%. A lot of people feel in a hurry because as interest rates go up, their affordability goes down. They can borrow less. So you've got this buyer urgency, but you see this seller supply at an all-time low. And the interesting thing is we have a saying in Australia, because we have live auctions, that the break-even point is about 3. Once you have 3 people at an auction, that indicates that the market is well balanced. If you have more than 3 people who are actually bidding at an auction, then there's more buyer demand than seller. If you have less than 3, then
mm.
you have more supply than demand. And what we saw during the boom years, the last post-COVID, you had like kind of 8 or 9 people you had hundreds of people coming to an auction and 8 or 9 bidders, right? And then over the past year, that kind of dropped to kind of 2. It went down. And now you're seeing it pick up. You're seeing more people, it's well above that 3 rate, and you're seeing that pick up in the house price as well. So it's a very, very strange thing, right? Where it's gone this whole roller coaster whiplash. But again, like if interest rates start coming down, that may reverse again, because then sellers go, oh, okay, right? Like I think I can sell now. I think I can move. A lot more inventory comes to the market. Then you might have just as many buyers, but less buyers per property. So it's a real roller coaster right now.
Yeah, no, it's definitely a very interesting time for sure. It's cool to see that. I guess it's not cool, but it's unique to see that we don't get very many different perspectives from other countries. On the podcast to hear like and get the opportunity to talk with someone who has such deep insight as to what's actually going on in the other countries and in the market. So it's really cool to pick your brain on all this
Well,
stuff.
thanks, man. No, it's. I
But
mean, I married an American wife. We still own most of our property in America. So I've been passionate about Australia, in America, and other places, and I think I do have a unique angle for your listeners in terms of most of my investments are in America, and I'm quite familiar with that system and have a lot of things that have been working for us there. But now my job is Australia, so I get to see both worlds.
is the investment? I mean, without the capital gains, right? It sounds like Australia has a good place to invest. Are you starting to kind of switch your investment portfolio a little bit from the United States to Australia, or are you keeping some? Tell us a little bit about that.
Yeah, yeah. I won't go too much into my personal strategy. I think my
Yeah,
wife would
that's
not be
fair.
too happy. But we did just purchase our home here. We've been here for about a year. We purchased a house. It is our primary residence. Instead of buying a cheaper primary residence and a number of different investment properties, because of the capital gains
Mm,
advantages I mentioned, it's all in the primary residence, right? So that is a significant part of our investment portfolio. Now that's in Australia, and I think what will happen is, depending on what happens with my own capital gains or things like that, probably marginally it's tax advantageous for me to continue to accrue properties in Australia because of the favorable capital gains, even for investment properties in Australia. So that would be my intention. But that'll depend. I mean, a lot of my own capital gain strategies, I like to maximize leverage. I want to be in the market as much as possible. So that means is I don't keep a lot of dry powder. I ride the waves up and down. So I'm not sitting on a bunch of cash. It's like, great, I'm going to now jump in. I've already jumped in. Both the peak, both the bottom, and so it takes a fundamental change in my own personal wealth, new job or significant capital gains to make the next move at this stage.
Yeah, no, definitely. And to speak to that a little bit, in America, we have that, the 1031 exchange, because we have that super fat, capital gains tax.
Yeah.
But with one of our strategies that we like to use, the Deferred Sales Trust, what's unique is that you can sell any highly appreciated asset, defer all the tax, and then go ahead and reinvest the proceeds. But you're not constrained by the 45 days. You don't have to go back into real estate. You can go into other assets and get liquid. It gives you flexibility. It gives you the ability to control the timing on when you go in and out of real estate. So it's a phenomenal strategy that gives you the control to really kind of time the market and go in when you see these macro trends. And one of the benefits, I think, of especially down here in the real estate market that we have is, and you kind of touched on it earlier, in Australia, it seems like the interest rates, with all those floating rate variable debt, right, affects the housing market really quickly, very rapidly. Whereas in America, it's a much more of a lag effect. And so with that lag effect, right, you can see what's going on, by looking back a little bit, like, okay, hey, this just happened, so this is going to start to go, and it gives you some time to go out there and deploy your capital when you see the markets go down, or get on the sidelines when you see it. Okay, hey, this is about to go really south. So it's a phenomenal strategy that you can use in conjunction with a bunch of other stuff. But it's one of the things that we focus on down here at Capital Gains Tax Solutions, and it's why we do a lot of what we do.
Yeah, I must admit, I had not heard of the Deferred Sales Trust until I started listening to your podcast. Despite having bought and sold properties in America before, and it's not for everyone. It depends on your life circumstance. If you need the lump sum of money, you need a lump sum of money.
Right.
But typically you don't, right? So I thought it was really, really clever, and it's certainly something as we look to rebalance our portfolio next few years. It's something that I want to lead into. So it's really good you're being such an evangelist for that.
Yeah, it's a pretty cool. It's a game changer when you fully understand it, because you can diversify and get liquid and not have, you get a new depreciation schedule too. It's got a bunch of different awesome benefits to it. So huge pro list, very little con list. So it's a no-brainer in my opinion.
Good stuff, yeah.
Yeah, absolutely. You can find out more about that by going to capitalgainstaxsolutions.com. We have a mastermind group every Friday at 10 a.m. Pacific, 1 p.m. Eastern, if you guys want to check that out. John, where can people find you, man?
Well, I appreciate before you put up our website, domain.com.au and /research if you want to learn more about Australia. We also publish a lot of articles. Some of them are kind of what the celebrities are doing, which is a big fascination here in Australia, celebrity real estate, but also what's happening in the market. For me, I'm on LinkedIn. You search for LinkedIn, there aren't too many John Foongs in the world. Particularly in the industry, particularly America or Australia, would love to connect. I think we're all on a journey together. We can learn so much from each other, which is what this podcast is all about. So please feel free to connect. It's a very, very small world. I'd love to be in touch.
Yeah, absolutely. Awesome. Thanks again for coming on, man. Do you have any parting words?
Oh, geez. I think what you're trying to do here is really good. I think when I study both demographic trends in America and Australia, what explains so much of the rise and fall of various demographics is capital gains over generations. When I look at what's happened, if I think of a lot of African Americans in America who did not have access to land and ownership, and therefore the capital gains that came with that generation, you see how that has played over generations. We have this generational differences of wealth between people the same age of different races. And that's a bit less pronounced in Australia, but it's becoming a bit more polarized, where you have the haves and the have-nots. And so much was how much wealth did your parents bring to the table and how quickly were you able to acquire wealth? And so I'm very, very grateful for the work that you're doing in helping people, nerd out, geek out about
Yeah.
capital gains and be smart about it. I think I see my job is to how do we spread that? How do we help everybody thinking about that? And I think what you're doing to evangelize is great, and that's a lot of our mission. At Domain, we want to our motto is we want to inspire confidence in life's most important property decisions. And buying a house when you invest is such a big part of it. We encourage people to be in the market as much as possible, not necessarily to time the market, just be in the market. And I think that's one of the great things that you can do with property, and something we encourage folks. So they're my parting words for today. Thanks for having me on.
Awesome. Well, thank you so much for coming on, John. Really appreciate it. All your wisdom and insight. It was awesome to see just some of the, the similarities and differences between, the two world markets, and it's fascinating stuff. So thank you so much for your time and for coming on.
Thanks, Pierre.
And thank you guys for watching another episode of the Capital Gains Tax Solutions podcast. As always, not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to exit highly appreciated assets tax deferred, so you can create, preserve, and grow your wealth. Don't forget to hit the like button, subscribe button, notification bells. Connect with John on LinkedIn. Go to domain.com.au/research to check out Domain out there if you want to check out the real estate in Australia, and go to capitalgainstaxsolutions.com. Sign up for the mastermind every Friday, 10 a.m. Pacific, 1 p.m. Eastern. So thank you so much, guys. We'll see you on the next one. Bye now.